Good morning, class 12. Well, already in the previous video, you all have studied how to estimate national income by expenditure method, where you take into account private final consumption expenditure, with which you take government final consumption expenditure, then you add gross domestic fixed capital formation plus change in stock or inventory investment plus net export, and you are able to reach to gross domestic product at market price or GDP at market price. And you know very well that from this, if you deduct depreciation, you are able to reach to net domestic product at market price or NDP at market price. Now from this, if you deduct net indirect taxes, then you reach to net domestic product at factor cost or NDP at FC. Now in NDP at FC, when you add NFIA, that is net factor income from abroad, then students, you are able to reach to NNP at factor cost, net national product at factor cost, which is actually a national income. So this is the measurement of expenditure method, which you have to keep in mind to do the numericals on expenditure method. So today in this video, let's do the numericals by expenditure method. And the data which has been given over here is that from the following data, you need to calculate GDP at market price and GDP at factor cost. And the items which have been given over here, the very first is gross investment, which is rupees 90 crore, then net export, which is 10 crore, then net indirect taxes, which is 5 crore, depreciation, which is 15 crore, then net factor income from abroad is minus 5, then private consumption expenditure is 350, and the government purchases of goods and services is rupees 100 crore. Now children, the very first thing which we have to calculate is GDP at market price. And you know very well, to calculate GDP at market price, the items which are to be included are, the very first one is gross investment, right? In it you will be adding what? Net export, plus you will be taking what? Private consumption expenditure, plus you will be adding government purchases of goods and services. That is rupees 90 crore, which is gross investment, plus rupees 10 crore, which is net export, plus rupees 350, which is private consumption expenditure, and plus rupees 100 crore, which is government purchases of goods and services. And we are able to reach to GDP at market price, which is rupees 550 crore. Right? Now you have to find out the next thing is GDP at factor cost. And children, you know very well that if you have to reach towards the GDP at factor cost, then what you are supposed to do is that to reach towards the GDP at factor cost, what we will be doing is that we will be taking the GDP at market price, which we have already calculated, that is rupees 550 crore, and from this, you know very well, you need to deduct what? You need to deduct the net indirect taxes, and this net indirect taxes is rupees 5 crore. So if you deduct 5 crore from 550 crore, you reach towards rupees 545 crore. So your GDP at factor cost is rupees 545 crore, right? Now the only thing which you have to remember is the measurement of expenditure method. Now the next numerical is that from the following data, you need to calculate the national income. Now here we have to calculate national income. So let's see what are the items which have been given over here. The first one is net change in stock, which is rupees 50 crore. Second is government final consumption expenditure, which is rupees 100 crore. Then we have net current transfer to abroad, which is 30 crore. then gross domestic fixed capital formation, which is rupees 200 crore. Then you have private final consumption expenditure, which is rupees 500 crore. Net import rupees 40 crore. Depreciation is rupees 70 crore. And net factor income to abroad. Now this is net factor income to abroad, which is minus 10. And net indirect tax is rupees 120 crore. And the last is net capital transfer to abroad, which is rupees 25 crore. So to calculate national income, the very first thing which we are calculating over here is GDP at market price. Now when we calculate GDP at market price, children, so let's see what are the things which you need to consider. So the very first thing which you need is, which you will be considering, is government final consumption expenditure, plus you will be adding gross domestic fixed capital formation, plus you will be taking private final consumption expenditure, plus you will be taking net change in stock, and minus net import, right? Now when you take rupees 100 crore as government final consumption expenditure, in it you add rupees 200 crore as gross domestic fixed capital formation, plus you add rupees 500 crore as private final consumption expenditure, plus you add rupees 50 crore as net change in stock, and minus rupees 40 crore as net import, because that is the amount which you have paid to the other country, and you reach towards the GDP at market price, that is rupees 810 crore. Now children, what we will be doing, we are going to find out NDP at market price. And to find out NDP at market price, you know very well that from GDP at market price you deduct the depreciation, the value of depreciation. So already we have calculated GDP at market price, which is rupees 810 crore. And from this, when you deduct the value of depreciation, which is actually rupees 70 crore, you reach to NDP at market price, that is rupees 740 crore, right? Now from this, you are going to find out NDP at factor cost, which is actually equals to NDP at market price minus net indirect tax. Now already we have calculated NDP at market price, which is rupees 740 crore, and from this you are going to deduct the net indirect tax, which is actually rupees 120 crore, and you are able to reach to rupees 620 crore, which is your NDP at factor cost. Now it becomes so easy to calculate national income, that from NDP at factor cost, as it is net factor income to abroad, means we are paying, so minus NFIA. So NDP at factor cost, already you have calculated rupees 620 crore minus NFIA, and already your NFIA is minus 10. So in bracket minus 10 crore. So you know that minus sign converts to the plus sign. So here you get rupees 630 crore to be as your national income. So students, this is how you can calculate national income by expenditure method.